Well, hello everyone. Welcome to Trading a Smaller Account. My name is Barbara Armstrong. I'm a coach with Schwab. Delighted that so many of you are here with us live today. I got to meet a lot of you, or at least a couple of dozen of you in Chicago at the Advanced Options Workshop, and great to hear your stories, your trials, your tribulations, and your incredible successes, and just how this education has had such a positive impact for many of you on your lives. So if you are just getting started with this, know that this is a journey. This isn't a one-stop shop. You're joining a community of people, and we are linking arms together and figuring this stuff out. Today, there's a sea of green everywhere after some interesting shifts in the tariff talks over the weekend. And we're going to kind of look at some positions, do some trade management. We're going to talk about a strategy that Mike Fairborn has talked about often when he was teaching the covered call and short put class on Mondays, which I believe he calls it the wheel strategy, where we're selling puts. And then if the stock is put to us, we're then selling covered calls. And so we're going to look at, today at trend, we're going to look at volatility, we're going to look at the things that we want to take into consideration when we're making a decision, and along the way, we're going to place several example trades. We have some trade management to do as well. So we've got a jam-packed agenda. We have the privilege of having Mike Fairborn with us in the chat. If you aren't following the pair of us on X, you are missing out. My handle, Barb Armstrong CS, Mike's handle, Mike Fairborn CS, so be there, be square. Know that everything that we cover in this class is for example purposes only, none of it to be construed as a recommendation. Know that options carry a high level of risk and aren't suitable for all investors. We do a lot of options trade in this trades in this trading a smaller account class as examples. We also use the Paper Money software application on the Thinkorswim desktop platform, which is a great platform for you to be able to learn and hone your skills. Make sure you understand your trading plan and the strategies you're trading before you consider trading it in a live account. One of the nuances or differences is that short positions will never be assigned early in Paper Money. That can happen in a live account. If you are experiencing a little bit of remorse after you saw all the pictures on X of the Advanced Options Workshop, know that there's a bunch of workshops coming up. I'd say please register sooner rather than later, because these fill up quickly. In April 11th and 12th, Kevin Horner will be joining Ben Watson at the Detroit Marriott for an intro to technical analysis and then options workshop. There will be another advanced option workshop in Dallas at the end of April. And then at the beginning of May, Kevin Horner once again will be joining Ben Watson at the Gaylord Rockies Resort, as Kevin lives in the Denver area. So if you've never been to a live event, you can come to schwab.com/events and check it out. Okay, so, we started the year with 25,000. Our max position size is 5,000. That's going to be relevant today. And you may say, hey, back the truck up. I met you in Chicago and you were saying with a large account, because this is how much? This is a 20% position size. Okay. So Jack is saying that Dallas is full. They may open that up again. So keep checking back. But if not, if you go, they will register you on site. And you didn't hear it from me. But know that if you do go, that they will not turn you away. So here's our max position size. This represents 20%. And why did we do that? Well, we did that because we have a smaller account and we want to talk about the type of strategy that we're going to talk about today and be able to place some trades. But if you had, say, $1 million account, so let me put all the zeros here. You might say, well, I want my max position size to be 5%, not 20%. And here, we have a max risk of $500, which is 2%. And, if you had $1 million account, you might say, hello, I want that to be half of 1%. That's still $5,000 on $1 million account, half of 1%. Or you might say a third of 1%. Or you might still say, hey, I'd like it to be 1%. Okay. But, so it depends on your account size and the amount of risk that you're willing to take. And our focus on this in this class is on that shorter to more intermediate term time frame. Okay. And we're trading both bullishly and bearishly, just depending on what's going on in the market. And so for all of you who are typing in, I know Bridget is here and she's shared some really wonderful stories, with me, about what her embracing this education has been able to do for her, and Constant and several others. It's great to see you all now here today. Okay, so let's get out and have a look at the market. Now, as you guys know, if you're a regular, we were, had really kind of, I'd really kind of toned it back on talking about the markets, but it's really difficult not to talk about what's going on in the markets because that influences everything. And one of the things that came out in Chicago was somebody came and said, okay, so, they were talking a lot about volatility in this particular session. And it's like, now I'm confused. Do I look at trend? Do I look at volatility? Like, what's the most important thing for me to be looking at? And I think first and foremost, we want to look at trend, and we want to look at both the trend of a stock. We want to look at the trend of the market. We want to look at the trend of the sector that those stocks are in and look at, is there some sector rotation going on? And then once we have a bead on that, then we might want to layer in these other things. So if we look at a stock and we see that it's uptrending, then volatility may influence how we choose to trade that stock. And we're going to go into some examples on that. But, one of the things that, we have struggled with this year, and I don't know that I'm the only person that has been on the struggle bus in this regard, is like, what on earth is happening with the trend? Because we look at the last year, and so I've got a 1-year chart up here, and let's show price as a percentage. So I've just come to underneath this pattern and clicked on this. Reminds me of my calculus class. In first year of university, that was tough. Anyway, we are still up 10% in the last 12 months. But at one point, if we look at, and let me get my drawing tool here, from this bottom to this top, at one point we were up 23%. And then we gave, 12% of that back. So we were in correction territory, and we've broken down through a number of support levels. And in fact, not only did we break down below the 10-day moving average and the 30-day moving average, but this black line is the 200-day moving average. And so that's a pretty significant breach. And then there was a change in, the tariff talks. And so this market seems to be driven a lot by news. And so I think this is another year that's kind of been sponsored by the American Chiropractic Association. We've seen a lot of whipsawing in the market. And, when we come in a little closer, it's like huge down day, down, huge down day, huge up day, huge down day, like whiplash kind of going on, right? And now we see today, this gapped up on the open is up 1.7%, but it's kind of playing kiss and tell with this 200-day moving average. So will it move back above it? It's above it right now. But where will it be by the end of the day? Well, who knows? But one thing about this candle, and I'm doing this series on short, very short videos on candlestick patterns. But one of the interesting things about this particular candle, we've seen lots of long wicks on these candles. This one, it opened and it started to run, and it's just kept on running so far today. And if we come to the Market Watch tab, and this is the visualization, the index watch, 444 of the 500 stocks, that's 89% of the stocks are up today. And if you hover over a particular stock, we can see, you know, AMD up almost 7%. You know, Decker is up. If we look at the bottom, sorry, I've got another screen in front. Let me scroll down. Decker, if you look at the bottom there, up 6%. DRI, Darden Restaurants, up 5%. What's this? Dollar Tree. And we've looked a lot at Dollar Tree, right? Because we've been doing iron condors. Okay. Yeah, so Lorella is saying she's a newbie here. So if you're new, feel free to type a greeting into the chat so that we can welcome you. So welcome to all the people that are new, and know that we link arms here every Monday and Friday for trading a smaller account. And then on Wednesdays, we treat it as a companion class to this, where we're trading price patterns. But what we're seeing today is a lot of green on the screen. Now, just a couple of days ago, you know, back on the 13th, you know, it was a sea of red. And so we've had, you know, a lot of whiplash kind of going on here. But if we come from Market Watch to the heat map, you know, we're seeing a lot of green on the screen. And I mean, look at Tesla. After getting absolutely hammer smashed, it's up 9.5% today. You know, and then if we come and we look at the NASDAQ, kind of more of the same. You know, if we come back to our index watch and I change this to the NASDAQ, you know, 94% of stocks on this index are up today, and up pretty big. You know, again, AMD, Tesla's, you know, AMD and Tesla are the two, you know, heaviest hitters, you know, on semiconductors. So a lot of tech stocks. And then if we come over and look at the sectors, you know, what we've seen year to date is, you know, when we look at the last 3 months, consumer discretionary and technology were vying for last place, along with communications. And most of last year, those three were, you know, the heavy hitters. And then we've seen energy, healthcare, utilities, you know, have been more rotating into favor. Staples, energy, healthcare, industrials, you know, this is in the last month. And technology and consumer discretionary, you know, have been at the bottom of the heap. And then all of a sudden today, you know, who's the shining star? Well, we've got information technology up 70. If we click on these and then come over to charts, you know, but again, far under the 200-day moving average, even with this gap up today. Communications. Now, this one's above the 200-day moving 200-day moving average. And are we surprised? Well, not really. What is one of the advantages of communications is that those stocks, the stocks like Meta, are kind of tariff agnostic, if you will. Financials. And financials pulled back, but not nearly as dramatically as you know, say the tech sector. You know, and if we look at something like a Meta, you know, we can see that, you know, although that got hit, it's kind of continued to trade in this range. Okay. Okay. So I'm just looking at the chat. There's been a lot of chat about Palantir. You know, and this is a stock that, I mean, year to date, it's up 24%. In the last year, if we look at this, like up how much? 290%. Kind of extraordinary. And what's the price on this? $95. Now, in this class, we couldn't afford to do this, you know, sell a put strategy. Why not? Because if the stock were put to us, you know, we don't want to have a $10,000 stock position. Now, if we did this, and this is where, if we look at the trend of this stock, so this in the last year, it's been on quite a tear. Even with this pullback from 125 down to 80, in fact, a little bit below 80, it's still up 24% year to date. And if we looked at this and we said, well, what if we did want to do something with this stock? If we look at this and we think that this, and we've been watching the company, we might want to come over to live news. It gapped up on its last earnings announcement. And so might we want to kind of scroll through and think, like, what are the analysts saying? And so you could come over here and start scrolling through, because these were hit hard, but Loop Capital maintains a buy, has a price target, has lowered their price target to 125, but that's still an all-time high for this stock. Loop Capital adjusts their price target to 125 from 141. That would still be an all-time high. And in spite of the fact that this thing, gapped up. So if we look at this and we wanted to place a trade on this, we could come back and look at some different strategies. But what might impact our strategy now that we've looked at trend? Well, volatility. So we can look at the volatility in the market overall. And, it's come down a lot, but it's still at 18. And if, we look at 18 in the context of the last year, so let me change this to 18. It spent a lot more time in the last year under 18 than above it. And so, if we come then and we look at Palantir, and then we look at the volatility on an individual stock, this is at 72%. It is really high. Like compared to, let's look at a stock in the staple sector. Now, I'm not saying that I consider POP, which is what we Canadians call it, a staple, but it is in the staple sector. This has, a volatility, this is implied volatility, is 19%. And here's a $68 option. And if we were to sell a put, we'd get 65 to 69 cents. That's in the neighborhood of 1%. Where if we look at a Palantir, and this is trading at almost the same type of price range, you're looking at, an at the money put is $5.70. Like that's over 5%. But it's recognizing the volatility. And you may say, well, how come the 95 has a ton of strikes and then the 94 and the 93, they all have zero? And you might say, well, a Friday, what was Friday? Last Friday. I was with some of the guys from the network on Friday, and they call it like triple witching Friday. So it is like the third Friday of the month is the, big expiration date. And so those options all expired on Friday, the monthly options. And so now these dollar-wide options are available. And we can see we already have lots of contracts being traded and a tight bid-ask spread, but there's no open interest because on these dollars, because they just became available for trading today. Okay. But because volatility is so high, could we come out here and even come back if we add more strikes? Could we come back to this 85 and sell a put vertical? Or could we come back to the 80 thinking that, and the thought being now, if we sold the put at 80, if it were put to us, our position sizing rules wouldn't allow us to keep 100 shares. So instead of doing that, we might just buy a put vertical or sell a put vertical instead. Or if we were really bullish, so let's just kind of write down the choices here. Let me get rid of that. So we could do a short put vertical, which is, I say, kind of sort of bullish. So come somewhere down in this neighborhood. And now it's at 95. We might have to come up to 85, but we could do a short put vertical. If we're really bullish, and maybe I say kind of sort of bullish, like could we buy the 90 and sell the 95 and do a long call vertical? We're already through both strikes. Now we might not be able to it might cost us too much to do that because volatility is high and those are expensive. These are going to be more expensive options because the volatility is very high on this stock. Or if we had a larger account, could we just come down to this level and kind of level and sell a put? Now we could do that. Now we've talked about why, with this account, we might not choose that because we don't want to end up potentially with a $10,000 stock position or an $8,500 stock position. Now we could also buy a call, but because volatility is so high on this stock, that makes those calls pretty expensive, doesn't it? And so if we're saying, well, we might prefer to sell something, then with this account size, then this might be our strategy. And this is something that I get asked in the surveys a lot is like, how do you decide what strategy you're going to use? And this is part of the thought process that we have to go through. What can we afford to do? And what makes the most sense given trend and volatility and all of that. And so let's come down. And if we said, hey, if we made this 85, so if I made this 85 instead of 80, am I cool with having my strike there on a short put vertical? And you might look at that, like I look at that and I think that's in the middle of the mess. No, I'd want it to be more like 80. I'd want that to be more like 80. And you might say, well, hey, it just gapped up today. Tomorrow it could come back down. And that's certainly, so we might just choose to wait. We might not be able to get enough premium. And then we've got a little blue dot here. So earnings is coming up, but it's not till May. So if we came out this 24 days and I'm going to come out 35 strikes. So if we came to the 80, it's $1.32. Chances are we wouldn't get enough premium for it to be worthwhile. And so even though we like this trend, we might just say, you know what, but we're going to wait. And if it comes back down, then we'll consider it. And if it doesn't, well, 55 cents isn't enough. And with this big move today, we can't get enough premium to sell a put vertical. Now, if we come to the long call vertical, and this is one of those stocks I just want to point out, even though it had this pullback, it never even came, within binocular distance almost of the 200-day moving average, unlike a lot of other stocks that are still on the other side of it. So could we come out? And now I don't need. We can come back here to 10. So if we looked at this 90 and 95, well, this idea, it's kind of modestly bullish in that we want it to stay above 95 over the next 3 weeks. So we're buying a vertical. It will pick the least, the smallest, the next available strike. But if we wanted to do 90 and 95, we'd pay almost $3 for that. And on average, we want about a 50% return. So we'd be in that until it got close to 450. It'd probably be 445. And so because it had such a big move today, we might decide to just wait and see if it pulls back. Or we might say, hey, you know what? maybe I'll be more conservative, and instead of going for the usual 50%, if it moves up again tomorrow and I put in a more modest target of, say, 25%, I may be able to be in and out pretty quickly. And so if we come to our trade tab and we look at this and say, okay, if I take my 295 and I multiply that by 1.25, that would be 368. So, are the odds high that Palantir's volatility is going to drop significantly? Well, it could. In an average day, this stock can move $14 up or down, or what they're saying. Actually, that's ATR. This is saying over the next 3 weeks, the expected move, the one standard deviation move, is $14.43 up or down. So that could either work brilliantly for us or devastatingly against us. The one ATR on this, which is on our chart, is almost $7. It's $6.78 over the last 14 days. So if we wanted to do this in a little more conservative way, what we've done is chosen strikes that it's already through both strikes. So if we come to confirm and send, our break even on this is at $93, and this is modestly bullish, but it's already trading $2.50 above that. So we have $2.55 of grace before, our trade is no longer, breaking even. And so we're going to put in a first trigger sequence on this, a right click, and an opposite order, and we're going to make our target on this $3.69. And we're going to make that good till canceled. Yeah, you can thank one of the people that was at the event this past weekend, because we had a conversation about, how do we prioritize? And that's really what has became the topic for today's class. Okay. So, and we just did we bought one contract. Why is that? Because it was almost $300. It was $290. And how much could we lose of that? We could lose all of it. And you'll see here that both strikes are in this yellow section, which means they're both in the money. So as long as Palantir stays above 95, if I change this now to 95, because our strikes are at 90 and 95, I want to see this on the chart. Long call vertical at 90 and 95. It's already through both strikes, and it just has to stay there. I think it's April 17th. So now when you're checking your positions daily, you're going to look at that and say, okay, I want that to stay above there. Okay, let's look at SMCI. So SMCI, we have, it's down a little bit today, but what we saw over the last year was here was a stock that got really hammered. And then it kind of tried to rally and kind of slid down the hill again. But since the beginning of February, even though it went up and came back down, it's been holding this horizontal support line. And if we, again, you might want to come down and do a little bit of analysis. I was in the chat today, and there were some people chatting in, and just talking about different things. And it really is heartwarming to see, like, just how much people realize it's important to kind of understand what's happening globally and what's happening, politically within the world, and how much news can impact the markets. But, you're going to want to come and just do a bit of reading and just, be aware of what's going on. But when we come in, and look at a tighter time frame, and this is a very heavily traded stock, we can see that this support level has been holding. And so when do we have earnings? At the end of April. So could we come out and do something in a shorter term time frame And, tech is up today, although it has been beaten up. Year to date, this stock is up 32%. And could we maybe come down here and sell something below this support level? And this, because the stock is trading at $40, it had a 10-for-1 split back, at the end of September. So this is something that we could afford if we sold a put, we could afford to add 100 shares to our portfolio. Now you may say, oh, I'm not sure I want 100 shares. Then you may not want to sell a put. And that's totally okay. But this is this idea that I referred to, at the beginning of the class of if we sell something below this support level, the idea is that ideally we just get paid a credit, by selling the put, and then it expires worthless, or we buy it back when it's lost most of its value. If the stock is put to us, what might we choose to do? Well, we might choose to sell a covered call on it, and if we get called out, well, Bob's your uncle. Like we're happy about that because we made money by selling the put. And then if it rallied and we sold a call and we got called out, then we made money by selling the call. And hopefully there was an appreciation in the stock value as well. And so we can kind of wash, rinse, repeat. And then could we sell another put if we get called out? We could, until it's no longer in our snack bracket. So the next question we would ask ourselves before we, kind of get into the weeds is, well, I see an uptrend here, even though it came up and came back down to this support level. I see an uptrend, or that it's hugging this support level. But, is this one of those high volatility stocks? Well, we thought that Palantir was high at 70. I mean, this is like super high. This is even higher than Tesla. And Tesla's pretty high. It's at 80%. As opposed to our Cokes and Pepsis and Kroger's, Pepsi's higher than Coke at 25, but these guys, a lot of these staple stocks are much lower. And so, but if we look at SMCI and we say, okay, if we looked at this, 37, 38 strike, and if we're trying to go out a little further, so this 37.50 doesn't have any options as of this morning because it just became available to trade today. But the 38, like we've got tons of volume here, thousands of contracts. So if we look at this 37, what is our delta? Our delta is 28. That means, if this stock, well, it's negative 28. So it means if this stock goes up $1 in value, the value of this option goes down by 28 cents. And so, that's, and what else? I've got probability of in the money and probability of touching. So when we look at this probability of in the money at the 37 strike, we have a 35% chance that this could end up in the money at expiration in 24 days. We have a 67% chance of it coming down and touching it. And so when we look at that, why do I bring that up? Because it's saying we have a 68% chance that it could come down and kiss that 37 mark. Now, this isn't taking our technical analysis and all of that into account. This is just a statistical number based on where the stock is currently trading and the price of this strike. And there are some other factors in there as well, but they're not looking at the charts to come up with this number is what I'm telling you. And so, but are we going to, get our knickers in a twist if it comes down and kisses it? No, because we've got a 35% chance it could be put to us. And if it's put to us, do we have a plan in place? Well, we're going to come over here and then look at selling a call. And we've got lots of volumes on the calls as well, and a pretty tight bid-ask spread. Like this is 6 cents. And we're saying if we want it to be less than 10%, on selling a put, well, we could be 17 cents and we'd be okay. So we're going to look at selling a put, and selling a put means we're willing to buy the shares at this price. and we've got almost $4 worth of grace, which is a 10% move for this stock. But, this is a volatile stock. Like, look at our volatility here. And so, and while that makes it appealing in some ways, because the premiums are so much richer, there's more risk. And so if we look at this selling a single, now we might say, okay, if we get to the point where we've got 80% of our max gain, we might choose to buy it back. But like if we get together again on Wednesday and this stock has had another really big move, and maybe we've already got 50% of our max gain, or next Monday, might we choose to buy it back then? Absolutely. But like, what if I'm visiting family, which I will be doing at the end of this week? Just spoiler alert. And I'm not looking at this trade, and it bounces up, and I could have been out at that price. Well, wouldn't it be nice to have an order already in the system? So 34. I just took 17 and doubled it. So that gives me about 80%. But it doesn't mean that come hell or high water, we have to stick to the 80%. And how much could we lose? Well, this is saying we could lose $3,500. But, if the stock is put to us at 37, and it could be, chances are if it's put to us at 37, we have to buy it at 37, chances are it will be trading less than that, right? And the most we can make on this is, the credit we're getting to begin with. So what we might do, so I don't know if I have short puts in here. So we're just going to put this in, and then I'll create a group for it. But we could come out here to our charts and say, hey, here's, if it goes below 35, let us know, or what was the low on this day, 34.50. So we could come in and put an alert and say, hey, if this goes below that 33 level, let us know. Do we exit the short put position? But, it could be just a one-day wonder thing with a candle with a really long list, with a really long tail, and maybe we don't want to get out. And so by putting the alert in there, however you have your alert set up, it will let you know. Now let's look at Amgen. So I started by looking at stocks. It may have been on the NASDAQ. And so here's Amgen. And, there have been a lot of these charts, this type of pattern setting up. And if you're new to all of this, you may want to join me, even if you're not new, on Tuesdays for getting started with technical analysis. So this is a pretty standard or typical cup and handle pattern. And then we had a breakout. And then, so it kind of came and it broke out. And then it came back and it retested. And then it broke out again. And then it retested. And it's still kind of above this 309 line. So could we do something that I like to say is kind of sort of bullish, like and sell a short put vertical? So as long as it stays above this, 305-ish level, or maybe 310, it's currently sitting at 315. So if it goes up, we're happy campers. If it goes this way, we're happy. We've even got, maybe $10 worth of buffer here. If it can come back a little. So it's less directional. And if we're selling, this is a net selling strategy. So with a short put vertical, we're trying to take advantage of the fact that, volatility is a little higher in the market in general. Okay. So let's go look at the trade tab. So when I look at the trade tab on this and we come out, oh, isn't this interesting? Because I was going to use this as an example of, and I had written down Amgen, short put vertical. And then on my notes, I wrote nope, because the bid-ask spread is too wide. But the bid-ask spread has tightened up quite a bit since I looked at it just a short time ago. That's kind of interesting. So, we've gone from 68 to 89. So that's about 20 cents, 21 cents. And that's less than 10%. Now, this is an expensive stock. We're at, almost 600,000 shares traded. So, chances are it trades more than 1 million shares a day. We can kind of come back and look, and on average, like 4 million, even on this one, which seemed a lighter day, 1.8 million. So, if you look at our example trading plans, and I'll show you that. Kyle, let me go back and look. So we wanted to look at 305, right? So 305, and we're looking at selling a vertical. And we're coming out 24 days. So we've got a 58-cent credit here, and we're risking how much? 250. So if we come to our calculator and we say, okay, so that's 58 divided by, and we're risking 250 minus the 58, so $1.92. That's about a 30% return. And our rule of thumb is if we're in it for 24 days, we want at least a 24% return. So how many of these could we do? We could do 2 because we're risking how much? We're risking $400 if we do 2. 386, what's the most we can make? 114. And so if we're okay with that, we're looking for a base hit. We're not looking for a home run. Single order, first trigger sequence. And again, we're going to say, hey, like what? Let's see if we can get 50 for that. So we'll lock that at 50 and say, hey, when it's worth 10 cents, we'd like to buy it back. Confirm and send. And we're not taking transaction costs into account here, but because we're doing 2 contracts and it's 65 cents a leg, our transaction cost would be $260. We're going to put that in our short put vertical group. Okay. Someone asked, could this be a Head and Shoulders? It kind of looks Head and Shoulders-esque, doesn't it? But it hasn't broken below the support level. The other thing is some technicians, this pattern here, this date was February 25th. We're not even a month into it. They like to see these bigger patterns like inverted Head and Shoulders or double bottoms or Head and Shoulders patterns like we saw on CMG. Set up over, say, a 3-month time period or longer. So you can see here on CMG, someone in the chat had typed in the question, is that a Head and Shoulders pattern setting up? And it's kind of a very small time frame for that type of pattern, where when we look at CMG, this started, back in October of last year. And here's our Head and Shoulders. And then it broke down, kind of mid-February. It's like, oh no, Geronimo, are we going to be falling? Yeah. Okay. But yes, I like the way you're thinking. Let me say that. I really like the way you're thinking. Yeah, and somebody's saying that seems light for a gain. And, but it is a 30% return, and this is a small account. So what our mantra over the last 5 years has been like, if you can make $100 and then $150 and then $250, and it starts to look and smell like real money, and it starts to add up nicely. But it's important to protect yourself from a position sizing perspective, because sometimes we get news like we recently had, and then all your well-laid plans, get blown up in smoke, and you don't want to blow up your account. Okay. So guys, our time, believe it or not, like it comes and it goes so quickly, doesn't it? One thing, I want to point out for the people that are new, is if you haven't already subscribed to the channel, you're going to want to do that. So Trader Talks from Schwab Coaching, You know, here is our Trader Talks channel. It's another free resource for you to take advantage of. When you first come in, you'll see whatever's currently being taught. And then if you come to playlists, there is a playlist for the Trading a Smaller Account class. But I want to point out these mini sessions. So if candlesticks aren't something that you're feeling like you have ninja skills on, I'm creating this series of just short videos that I'm aiming for them to be between 2 and 4.5 minutes. I'm trying to get them under 3. And then I've got a series of example trading plans. So today we did a short put vertical. Here's an example trading plan. I think we did a long call vertical. Here's an example trading plan for that. I don't have one for a short put yet, but it will come. The next one I said I would do would be a long put with either a 1 ATR or a swing target. So I'm working on this in the in-between time. So as we wrap up, here's my ask. 1, if you haven't subscribed, please subscribe to the channel. 2, if you'd hit the like button, it's a way for 1, you to do a favor for a random stranger without leaving your desk. 2, it lets Mike and I know that you found this content valuable. And then follow us in the land of X, Barb Armstrong CS and Mike Fairborn CS. Mike just reposted those, so thank you, Mike, for that. And then we placed 3 trades today. We did a long call vertical on Palantir. We did a short put on SMCI, and then we did a short put vertical. And, you know, what were we looking at here, and what was helping us make a more informed decision was looking at both trend, support and resistance, and then volatility. So thanks to Mike for all his assistance in the chat, and the guys behind the scenes for doing what they do oh so well to bring this class to life. And thanks to each and every one of you for continuing to show up and be so participatory in the chat. I really appreciate it. Have a great day, guys. Up next, Mr. James Boyd. You'll want to stick around. Thanks. Bye for now.